to the Planet Gold program today. It is my pleasure to be moderating today's session. My name is Miranda Wurstiak. I am Corporate Development Director for OSIM Precious Metals, a French-based family office. I am coming to you from Toronto, Canada today with a nice little bit of snow on the ground. We're going to cover a couple of housekeeping issues before we get into the program. First of all, I'd like to draw your attention that there is an interpretation mode that we will be facilitating today. Please, is there a slide? I think there's a slide. Yes, you can go down, as you can see from this slide, to choose as the language that you want to hear the event in. Please ensure, again, for the panelists to keep it on off when you're speaking today.
Bonjour et bonsoir. Nous souhaitons vous rappeler que la traduction en français de ce webinaire est disponible sur le panneau de configuration en bas de votre écran. S'il n'apparaît pas, veuillez télécharger et installer l'application Zoom. Merci. Buenos días y buenas tardes a todos y a todas. Nos gustaría recordarles que la funcionalidad de interpretación simultánea está disponible en la parte de abajo de su pantalla. Si no la ven, por favor, descarguen la aplicación de Zoom. Muchas gracias.
Thank you. So now I guess we can start into our program for the day. I'm just going to give you a little bit of introduction on myself, and then I'm going to turn it over to Firas Abbasi to start into the presentations. As I said, my name is Miranda Wurstiak. I work for a French-based family office who is looking to provide funding into gold and silver producing assets. Of keen interest to the family office is the artisanal scale gold mining sector, because we think from our perspective, there's huge potential and capacity to provide sustainable, long-term, creative funding solutions to a sector of the gold mining industry that is significant and has huge impact. One other housekeeping issue before we move into the session is that, as you will see from the agenda, there is a Q&A session set for the end of the presentations and panelists. Sorry, I'm just looking at a note for the panelists. Please, could I ask everyone to hold their questions into the end of that session? You will be able to put your questions into the actual Q&A mechanism at the bottom of Zoom. There is a chat function, but if you use that for questions, they will not be that function will not be monitored for the questions. So please, if you have any questions, add them into the Q&A function. Susan Keene from the NRDC will be coming in and monitoring those questions. So she will loop in at the end of all the presentations and the panelists discussion, and will monitor the questions accordingly. I'm now going to turn it over to Firas Abbasi, Finance Advisor for the Planet Gold Project. Firas, I'm just going to say a few lines about you before you, if that's okay, before you get into the meat of the presentation. I had the pleasure of meeting Firas through the Artisanal Gold Council, based in Victoria, BC, Canada. He has over 12 years experience in the investment management industry. He's going to be speaking to us today about mechanisms of accessing finance for the small-scale artisanal gold mining sector. Take it away for us.
Thank you, Miranda. Thank you so much, and welcome everyone. Well, we are fortunate to be in a position with this opportunity to contribute to global prosperity. Improving access to finance in the artisanal and small-scale gold industry enables many communities around the world to grow and thrive as they experience the benefits of the global economic inclusion. So before I pass it on to, or before we get to our presenters and hear from them today, I will walk you through a quick introduction to the industry. I will go over some of our findings on the barriers to finance and what to do about them, and then we'll go over some of the mechanisms that could provide some ways to overcome these barriers. So if I can go to the next slide, please. Am I controlling the slides, or somebody, if you can go to two slides. Okay, perfect. And the next one. Perfect, thank you. So the ASGM industry is significant. Gold supply globally is about 4,000 tons a year. That's all producers. That's industrialized mining as well as the artisanal and small scale miners. The ASGM industry, or the artisanal and small scale mining industry, is about the gold that comes out of there is about 20% of that total production. That is about $35 billion a year worth of value that's being produced by this industry. And that statistic was based on approximately $1,300 an ounce gold. In today's prices, with $1,800 gold kind of hovering around that level, it is probably around $45 billion. Due to the inefficiency in production and supply chain, miners see about 70% of that value, which is generated by 90% of the global mining, gold mining workforce. So all the gold mining workforce, the industrialized large scale miners and the small scale miners, 90% of that are small scale and artisanal miners. And about 100 million people rely on the income generated by that activity. And that's, of course, the families and the secondary economy. Next slide, please. So for those who are new to the ASGM industry, I was one about a year ago. It is important to note that the industry is diverse. When I'm asked about the industry or explain what I do with friends or family, I often find it interesting to explain. Defining the industry accurately is a bit of a challenge. It's not that intuitive. But before we go into the details on financing, it is important to keep in mind a couple of things. The first thing is, who is it that needs financing? ASGM operations can range from a few individuals panning alongside a river, all the way to a small-scale industrialized operation like a central processing facility model. Next slide, please. The second thing to keep in mind is that what is it that requires financing? Well, the efforts carried out by stakeholders aim at formalizing and professionalizing the industry. That requires financing a variety of activities. Of course, mercury-free processing systems may first come to mind, but financing is also required for providing training on multiple fronts. Another activity that is less obvious is resource management. An example of that would be having some exploration to understand what the deposit looks like that's being mined, as well as create some plans around the mining areas so that you can mine it in a responsible, efficient way that not only prolong the life of the operation, but also maximize its value. We have observed the impact of the COVID-19 pandemic earlier this year on the ASGM communities, and how in many countries, the supply chains actually fell apart, forcing miners in some cases into the black market. Areas that could use financing on that front could be due diligence systems and technologies that would, for example, help with traceability. So financing a reliable supply chain is essential to a stable and responsible gold mining industry. Can we go to the next slide, please? If we take a look at the current state of affairs in the ASGM financing, we find that due to the barriers facing the miners, access to finance, informal finance fills in these gaps. So miners still need to run their production and their sales activities. Informal finance fills in that gap, but it's a broad term as well. It is unfortunate, though, that this type of financing often exploits the miners. Some of our research has shown that the discount to the gold price could be as much as 30% in a normal environment. This gap has definitely widened a bit further in the early months of the COVID-19 pandemic. So as mentioned earlier, not all informal finance is illicit. On many occasions, the relationship between the miners and the informal financiers is a long-standing and trust-based one. So recognizing these relationships and working with informal financiers can be very helpful, as they are the best positioned to understand the local context. Examples of ASGM financing include microfinance. I know many of you are familiar with it, but it's distributing some funds across many individuals, like in the form of small loans. That's how it usually looks like, to the counterparties who have a credit history that would not qualify them to obtain a conventional loan. So one example was in Papua New Guinea. This was an interesting experience as it involved multiple donors as well as the private sector. The Asian Development Bank coordinated this initiative and provided about $10 million. This effort evolved into the creation of a fully licensed microbank in PNG. The high risk of the bank's portfolio, however, is now viewed as a problem. Nevertheless, this experience has helped kickstart other similar initiatives. So we also have an example of an attempt by private capital to finance ASGM. A South African venture capital fund attempted to form a partnership with a local mining group in Mozambique. And due to a misunderstanding between the fund's own objectives and the miners' cultural values, this has never materialized. So for more information on this, we have a lot of information and in depth. I want to point your attention to a couple of reports that Planet Gold had published earlier this year. And they're on the slide and they can be found on the Planet Gold website. So I encourage you to take a look. They're long reports, they're very informative, and you could just access it and look for the information that you need. And it's really well organized, and you could find a lot of information on that there. Next slide, please. So talking about the barriers to formal finance, if you can also forward to the next one. Thank you. So the work that we have done in identifying the barriers to financing ASGM operations is based on literature review, as well as tens of interviews with finance and investment experts. We can look at this issue from two different perspectives. The examples that we discuss here are by no means exhaustive, but indeed provide some of the, we look and highlight some of the important ones. So from the perspective of the miner, it is accessing the finance. On many occasions, miners have found themselves working in areas where they are unable to obtain legal concession to mine, and this prevents the formal financiers from engaging with what is considered as an illegal operation. Another barrier is the costly due diligence process. You know, financiers will have certain ethical, social, and governance standards with which ASGM operations may have difficulties reaching or sustaining full compliance. Another aspect from a miner's perspective is being prepared and ready as a formal business to receive the financing. So the question we ask is, will the operation have, for example, a trade accountant who can provide reliable forecasts for the business financial needs and potential cash flow that's being generated? Also, there is another risk, there's another issue, which is the lack of financial products that are available that would enable an agreement. So for example, some of the mining operations are seasonal. That is a rhythm that needs to be considered when designing a financial security where you allow for lumpy payments. Like there's a rainy season and there's a dry season or a mining season, and allowing for this and understanding this would help with the financing. Now, from the perspective of the financier, what we talk about in the investment world it's common and we use it, we call it headline risk, could be a significant barrier. This risk is significant. It's a reputational risk, and it's usually associated with the ESG impact, the environmental, social, and governance impacts. The industry has a negative perception. However, fortunately, the hard work is underway to mitigate these risks with technical teams working on mercury processing facility technologies and other experts providing social support. Other barriers include expensive due diligence process. That's just due to the nature of the industry, remote locations, little communication, little infrastructure. Also, the lack of investable projects, which is kind of the flip side of the business readiness on the miner side. The questions on the financiers' brains would be like, will this mining operation be able to apply a level of business administration that is acceptable to the financier? And lastly, we'll also, and often, I mention regulations around domestic and foreign investments that also may stand in the way of financing. So if you can go to the next slide, please. So addressing those barriers, the next one, how do we do that? Also a non-exhaustive a list of items that we talk about here, yet important measures to think about. Attracting private capital requires having investable projects that can be understood. For example, certainty and clarity around the cash flows and security of those cash flows through understanding those the various risks that are involved in generating the cash flows or the revenues. For impact investors or impact capital, we need to also understand how can we measure that impact? How can we facilitate the measurement of that impact as well? Governments also have a responsibility in accelerating the formalization of the sector in their jurisdictions. There is definitely a need to create clear and effective policies that enable the miners to maintain their legal status or a legal status. Legally recognizing the industry imparts a stable and organized structure that is more likely to succeed. The last point I want to highlight here comes from our research and past experience, is that the mechanisms and the sources need to be matched to the needs and profiles of the ASGM operations requiring the financing. So if we look at the next slide, this table we see here, it shows how, while in reality it's not all cut and dried, but it highlights the different sources of finance, the finance mechanisms and their objectives, and how to think about matching the needs and profiles of ASGM operations requiring financing. Like in the end, all stakeholders have a role to play. Miners can make their projects investable, governments can support and accelerate the formalization process, and financiers, including impact investors, can work with the miners to identify the appropriate financing. And this is what I have for you as an intro for today. We will shortly hear from our presenters on their experience with the different mechanisms. Firstly, we'll hear from Manuel Hurtado, who is Planet Gold's finance specialist in Colombia on commercial loans. Then we will hear from Dewi Krisnayanti, the portfolio manager for Planet Gold Indonesia, and she will speak to us about the role of government in supporting access to finance. And last but not least, we will hear from Suzette McFall, the CEO of Clean Gold Community Solutions, on the direct equity investment option. One last thing I wanted to mention before I hand it over to Manuel is that at Planet Gold, we are looking for investors who believe in the mission and would like to work with us on our first success story. This work will be in the form of minimal time commitment, about 4 to 5 meetings per year, as a small working group over the next 3 years or so, as we identify and work out mechanisms to overcome the barriers that we discussed earlier. So if you're an impact investor or or an investor who wants to make an impact, we would love to hear from you. You can definitely reach out to me or Susan directly, and we can take it from there. So thank you very much. And without any further ado, I will pass it on to Manuel.
Thank you for us, Miranda. I'm really glad to have this opportunity of speaking about what we have done in our country, barriers we have found, and strategies, alliances, and next steps we hope to give in order to increase financial access to ASGM communities. I am Colombian. I love my country. I am professional in finance and international commerce, postgraduated in strategic management, and I have 14 years of experience, 10 of them focused on participating and leading social inclusion projects to communities excluded from the financial sector, developing these projects together with organizations such as USAID, Chamonix, and UNDP. First of all, I'm going to briefly mention a few milestones of what we have already done before explaining a strategy we have been able to configure and next steps we hope to follow on the next year. If you could pass the slide. Thank you. First thing we did, actually is the second number of this slide, was to integrate the efforts and strategies of the project into the strategy of the national authority, which in our country is the Ministry of Mining and Energy. And this resulted to be a very important activity because it is the natural actor with the responsibility of regulate and organize the entire sector. In our country, we have been fortunate to find an authority such as the ministry with all the interest in generating processes of formalization of these communities, and we could participate in the integration and consolidation of a unique strategy in order to increase financial inclusion on these communities. This is important because it gives not only strength to the project, but also brings sustainability and continuity along the time to the implemented strategies. Additionally, we design a strategy with a national entity such as the Banco Agrario or Agrarian Bank to implement training processes and content related to the mining sector. It's been hard to sign and implement this agreement, but we're working on it because it is the entity with the highest coverage in rural areas of our country. On the other hand, we found an important ally, a regional cooperative called Cooperativa Confiar. With them, we designed a credit access strategy which we are about to sign, and also we are giving first steps in financial inclusion processes by opening saving accounts to transfer resources made available by the ministry to artisanal miners who were economically affected by the pandemic. I would like to take a few minutes to explain a little this strategy to generate access to credit with Cooperativa Confiar, and some aspects that we consider important for this to be successful. Can we go to the next slide, please? First of all, we would like to highlight the importance of integrate in each strategy as many natural actors of this productive and commercial chain as we can, because we think this will give sustainability and permanence to these kind of initiatives. In this case, we are integrating the authority, which is the ministry, a financial institution, Cooperativa Confiar, a local gold trader, technology suppliers, and of course, miners. At first, we are going to work with artisanal miners, and once we have tested the specialized technologies and created a methodology of credit analysis, we are going to work with small-scale miners. So what do we plan to do? We are going to select, together with the ministry and the financial institution, the ideal miners we want to work with. We believe it will bring trust or confidence to the actors about the levels of formalization and legality of the miners. The financial institution will develop its analysis methodology and will define the eligible miners to take a credit. Of course, the destination of these credits is to acquire free of mercury processing technologies, which we hope, and this is an hypothesis, we are not certain about it, that these technologies will bring higher levels of productivity and legal and better markets with fair prices for their gold. Once the credit decision has been made, Confiar is going to confirm to the actors the approval, and then is going to disburse the credit, not to the miner, but to the technology provider, to guarantee the correct use of these resources. The credit payment plan is going to be shared to the miner who had acquired the equipment or the technology. The next step is to find or allocate a local gold trader, which we have already done. We have integrated in this strategy a local company which we find vital to this strategy to work, because they have not only technical knowledge about mining and gold, but they are a filter in terms of risks such as money laundering, finance of terrorism, or impersonation of miners. So they guarantee miners are doing a correct activity. They also buy the gold at fair prices or better prices than other local informal traders. Another vital activity of this local gold trader is to collect the installments of the credit. They do it by discounting this amount in the payment of purchases to miners, and they finally transfer these resources to the final institution, Cooperativa Confiar. The project, together with the financial institution, will create a fund as an incentive mechanism with two purposes. First, to subsidize a percentage of the technology to miners with correct payment behavior along the credit. Or second, to guarantee a percentage of the credit to the financial institution in case the miner falls into default. In this strategy, we have training processes, incentives, and technical support for both miners and the financial institution. So what's coming next? Can we go to the next slide, please? In our country, we have found several barriers for miners to access traditional finance system. Some of these barriers are justified. High levels of informality, the lack of a clear legal national framework, the lack of previous experience with other financial products, lack or insufficient reliable information by the authority, to mention some barriers in this moment. All of these are mapped and are being corrected or have a strategy behind, and there are actions implemented by the ministry in order to correct them. But there are other barriers related with the willingness of traditional banks to attend these communities. The perception of risk related with illegal activities, drug trafficking, violence, and destruction of the environment is always in mind of financial system in our country. Additionally, some banks that have dared to grant products to miners have had bad experiences in this segment of the economy. In that order, we have settled strategic activities for the next year that we hope will generate early processes of financial inclusion, and we think are going to create conscience in the communities about the importance of financial education. So we are going to find local financial entities with knowledge of the territory, the culture and the behavior of the miners, and try to organize strategies similar as the one we could settle with Cooperativa Confiar. Meanwhile, we want to create saving and credit groups within the same mining associations to strengthen their own capacities and knowledge, to encourage them to access to clean technologies with these savings and credit groups. Then we have to, I think that we have to face reality. So we want to develop financial models based on the results of pilot tests with no free of mercury processing technologies, and see which of these communities are sustainable, both economically and environmentally. We are almost sure that we are going to find some mining communities that are not. So we want to focus an effort and some resources in financing reconversion processes of these communities, entrepreneurs in small businesses, agricultural activities, artisanal jewelry or other, that crosses in this moment to my head. And we actually have found interest of the financial system in support this kind of processes. So we think it's going to impact positively indicators of the project, will reduce mercury emissions, and will generate sustainable communities in our country. That's what I wanted to expose to you. Thank you.
Thank you, Manuel. And now we will learn a little bit from Dewi about the Indonesian experience. So over to you, Dewi.
Thank you, Firas. Good morning, good day, and good evening to audience from Indonesia. Today, I would like to share about the potential access on finance for small-scale gold mining in Indonesia, and also the fact situation of miner status in front of finance entities perspective. Next slide, please. There is a fact that none of finance institution in Indonesia is willing to support this sector. This is because the lack of knowledge and experiences on this sector, even though some of the finance institutions aware about this sector, but they still doubt that about first, the legality aspect of ore mining and ore processing. The second one about the continuity of gold recovery and actually how much the miners earn from this sector. And the third one is about the strongness of the business. Because of those reasons, there is no priority from the financial entities in Indonesia to support this sector. This is bold statement we receive from them that not commercially feasible. Next, please. In order to achieve the project target, a project has identified the possibility of finance mechanism that could be accessed by the miners. The first one, we are looking at two feasible ways. The first one is state bank to miners cooperative or cooperative members. The second one is about state non-banks to miners cooperative or cooperative members. The first one, state bank to miners cooperative or cooperative member as a debitor. Project has approached the state commercial banks and Syariah banks to support the miners by providing legal documents to the banks and also involving state credit insurance, which is aimed to convince the bank and back up the state bank also to back up the miners. The differences between the commercial bank and the Syariah bank is, I would like to make a simple example. For example, if miner want to have an access on buying the mercury-free processing plants, the commercial bank will give the cash for buying the equipment based on their loan proposal. For the Syariah bank will procure the equipment, then to be used by the miner, and the miner will be paid on their payment proposal until all the price is paid back. And later on, the equipment will belong to the miners. I would like to highlight the function of state credit insurance in this system. As you are all aware that every time you receive a loan from any banks, insurance will be part of the contract. However, no private insurance company is willing to be part of this contract with the small-scale gold mining miners. Thus, the state credit insurance we are expected will be part of this scheme. How they involve in this scheme? It will be a MOU between the state local bank and state local credit insurance to be signed for the ISDM sector. The example point of the clause, for the example on the MOU later on, may be about the flexibility of loan repayment. Maybe instead of 1 month will be every second month, because you are all aware that all the miners not gonna get gold really steady for this. And also we are trying to involve about the covering maximal 70% of the risk payment. Next slide, please. For the second is about the state non-bank to minors cooperative or cooperative member as debitor. Project has identified that there are 2 state non-bank schemes that belong to the Indonesia government, which is possible to be accessed by the minors. The first one is LPDB, or Revolving Funds Management Agency of Indonesia. This institution is under Ministry of Cooperative and Small Scale Enterprise. The second one is PIP, which is Government Investment Unit of Indonesia. This is under Ministry of Finance. And the third one is cooperative. We found that there are success story of implementation those support for cooperatives, but not yet for minors cooperative and the cooperative members. Again, this is about the doubtness of legality aspect and also the acceptance status that small scale minor is a profession, which is same like a farmer or fisheries. Cooperative Indonesia can have 2 units in activities, and most of the cooperative has a saving loan unit. For example, the minors cooperative, 1 unit for saving loan, which is able for the members to borrow the money and to support their mining activity or buying the mercury-free processing plant. And the second one will be, the second units will be either for mining or processing. As you can hear that many times I mentioned about cooperative, because under mineral and coal law, there is a mandate that miners cooperative allow to access the legality on or mining the processes. It states on the law there is, the document is proposed for the cooperative. Next slide, please. To support the miner to get access to finance institution, or on the other way is to convince the banks about their business, the project is trying to developing guidebook on the business and financial management for the gold miner and gold mining cooperative. We are also conducting loan application training and assistance at all our 6 project sites. And we also providing a consultant to each project site to train and assist miner for preparing the loan proposal. We are also providing micro grants to the legal ASDM cooperative in project site for enhancing their capacity in management and business. By end of the project, the LPDP that I mentioned before, which is a state non-bank, will continuing to look after this cooperative. Next, please. Bear in mind that all the scheme that I presented in today is about the going effort and a processing to get approval from all the mechanism. I will be happy maybe next event or next webinar, I will be happy to share the progress of this all ongoing effort and process after getting approval from the institution, which is from the state bank and also state non-bank. Thank you, Firas. Over to you.
Thank you so much, Dewi. This is really interesting, and I do look forward to hearing the good news soon. Thanks so much. So for our next presenter, Suzette McFall is going to talk to us about private capital, the private capital experience, and we're really excited to hear from Suzette. So over to you, Suzette.
Thank you, Ferris, and good day, everyone. Thank you for the opportunity to share my experiences with everyone. We're going to talk today about how we were able to get private capital to assist a small-scale mining cooperative to, I guess, proof of concept, and this was in Ecuador. So next slide. Clean Gold solution was born out of the necessary to provide access to capital to ASM. Our background, we've been working in communities for over 25 years, creating economic development initiatives, and we continue to come across ASM in many of the markets that we're in. And what we found out is that ASM is really about people that are entrepreneurs. And all entrepreneurs around the world need access to business knowledge, clean technology in this particular case to eradicate the mercury use. They need access to get to marketing and funding. And really, every entrepreneur wants a better life. And so with our SCF program, which I said has been around the world, this particular gave us the invitation to start seeing what ASM Life was about and what their needs were. So we looked at this and said, how can we help create an opportunity for financing? And to get this into a next slide, please. What we found is the answer being that these entrepreneurs lies in a program that gives them an opportunity to be an actual partner. And ownership has to be instigated into the ASM model. And this really is about economics of business, and it's about enterprise. Next model. Next slide, please. So what we were able to do is talk to the miners. And one of the things that we found with the miners is there are a lot of foundations, there's a lot of good intentions coming into these communities saying, let us help you. But what it was is that they were kind of left alone. They were brought in and saying, here's a grant, do what you need to do, and here's some training, but it didn't give them the long sustainability. Next slide. So what we did is we came in as a team that would work with the miners and the investors. So I think we solved some of the problems that we were talking about earlier in the other slides. Was they didn't have access to the business side of things, that investors didn't necessarily know how ASM would work, whether they could actually repay an actual loan if that's what was provided to them. So our Clean Gold model, we became the intermediary piece between the investor and the ASM. What we brought to the table was a business team, a technical team, and a community team. And I think I'll talk a little bit more about the community team in the next slide. But that's what we had to bring, because I think that was one of the barriers that we continue to talk about with ASM getting loans. We know that we had to get rid of the mercury use in order to make this a clean technology. And so we looked at what they were getting out of using mercury, and we brought into actual plant setup. So we had to do a plant for them. And in this particular instance, we actually rented a plant to become partners with the ASM. So we were able to recover a better gold. And this was a true partnership because we had the SCF community model, which provides economic development. What it does is it actually, which we'll talk a little bit further down the road here, is that we wanted to make sure that the miners who wanted to be passionate about mining were mining, and other community partners were actually economic diversification. They were not miners. They were taking off the mining situation and being able to do something along the supply chain. The important piece of this was the whole entire community was vested into this partnership. They became partners. Next slide. So the Clean Coal program, first of all, it engages with the community. The community has to look at this program as a community at whole. It's just not about mining. It's making sure the community is going to be taken care of. And miners are happy when you take care of their family, their cousins, their wives. Everybody in the community has to be successful in this program. Entrepreneurial development, as I said earlier, is that some people that are mining right now don't really want to mine, but they don't know anything else. So what we did is we instigated a program that would include taking people off mining and doing other things and keeping the miners who were really passionate about mining. One of the things that we have worldwide success in terms of economic development, working with entrepreneurs. We had a track record for trust, so they actually embraced the fact that we would become partners. Most important, it's their project. It's their ownership, their responsibility of their project. We're only helping to facilitate that project. Next slide. So the implementation, I've talked about this, about community. This is what makes part of it sustainable. Just like we do when we go into large scale mining companies that come into a community and empower certain jobs, certain people in a community to win, that doesn't necessarily work because it doesn't take care of the whole community. So in order to make these small scale miners more profitable, provide them more access to money, what about the rest of the community that isn't mining? So this has to be a program that initiates money back into the community and everybody's engaged. This is a true inclusive model. Next slide. The community has to invest in this. We can't just bring money into something without investment coming back. There's got to be skin in the game to make this a successful model. And sometimes, well, obviously they don't have money because that's what they need. So we have to put in an opportunity for them to invest. So they have to put in human capital to make it work. The community has to bring in in-kind donations to get involved in the project. Social capital, and those entrepreneurs, which are those miners, they have to put in the passion capital and make it work. And we actually have a program that makes sure that we're testing all of these capital and community investments. Next slide. We have to get miner buy-in. And this was a really interesting area that we had. We made really an elaborate presentation to miners. Now, we understand that some of the miners are illiterate. When we say an elaborate presentation, elaborate for them. And what we did is we put down, here's what we're going to do for you. This is how we're going to help you. This is kind of money you could make. And we showed them how the program would work. And unfortunately, their eyes would gloss over and go, we really don't understand. And I think that's one of the situations we have when trying to formalize miners, is that they really don't understand. What does that mean? How is that going to affect them? The key here that we found when we were working with this particular group in Ecuador was we showed them a piece of paper, 2 checks. And we said, here are 2 checks. Do you want this check or do you want this check? Obviously, one check was a lot larger than the other check. And at Kobole, they said, we want the big check. Well, that was simple. If you want the big check, this is what we need to do to access that money and that bigger check. So what we have to do is that we have to be a little formal. We have to make sure that you're not doing anything that you shouldn't be doing. You shouldn't be on someone's concession. This is how we formalize them without them really realizing that they were getting down that path. So they had to get that bigger check, they had to follow these new rules. And they were happy to do so, but they didn't want to understand how to get there. They just wanted to get there. And what we were was a company that would help them get there and make it easy for them, facilitate, as I said earlier, remove the barriers for them to access this happening. Next slide, please. This is what we actually showed them in Spanish, English for you here. This is how the model worked. We spent a lot of time. We worked with the University of British Columbia. We worked with a lot of community people. We worked with ASM miners. We looked at a lot of the models around the world on how they were working with ASM and providing them access to capital and financing. And this is the model that we came up with that was our success. So the first, on the left-hand side, what we saw was the miners brought their ore to this processing plant that we provided in Clean Gold. When they brought the tons into the plant, we measured it, we assayed it, and we gave them 20% in cash of that then spot price. What did it do for them is, first of all, it gave them cash up front. They needed to see cash. They're a cash society. The second is that it made them feel like they were getting something. They were just going to drop off their ore and get it processed. And it's like, hey, that's our gold. Well, in this particular case, yeah, it is your gold. We're going to give you 20%. And then you're going to go back to doing mining. And actually what it did is it gave them the financial model on how to save money instead of giving us a bunch of money up front. So the first thing is they got their 20%. Then we had processed that gold at that processing plant. And they were part of that processing plant. They were open to walking around the processing plant. There's fear when you're processing their gold. They wanted to see what was happening in the ball mill. They wanted to make sure we fed them, that they could walk around. As owners of this processing plant, they were partners in it. They felt that they had ownership and responsibility for this plant. It's a really important piece of this. And so after operating costs, and in that operating costs, what you saw was, there was management fees, there was a community foundation right off the top. 1% went back into the community. They saw that. It gave them pride of ownership. They were putting back money into the community, taking care of people. So all of the costs came out at that time. When the costs finalized, then we gave them a 50-50 split after all of the operating costs. So that's what you saw in the second on the left-hand side in the profit sharing agreement. So the profit at the end of the day, they got the majority of profit from the processing. At that point, SCF Clean Gold paid back the investors out of the profit from the business. We were responsible for paying that profit out. So we were able to give back the investors and then a balloon at the top of that. And then as this project continues, there would be a percentage royalty coming back to the investors for the life of the project. And I see a lot of people say, well, how do you know how much ore is going to be there? How much these artisanal miners are going to bring the supply to this processing plant? Well, one is if they're part of this processing plant and they take ownership of the processing plant, they'll always bring ore. And they always have to feed themselves and feed their families. They will always find ore. They find ore where large-scale mining companies don't find ore. So in this particular, for the investor is that we knew that there was always going to be a supply of ore for this processing plant that they were investing in. So investors would give us the money to buy the plant. We became partners with the miners, but we were responsibility for paying the investors back. Next slide. When we talked about alternatives, and this is really worth mentioning, and I think that we look at it from a sustainable ESG, this is important, was this particular picture is a woman who used to be a driller inside a tunnel of one of these small mines. And through our SCF side of our community program, which talks about economic diversification, she decided to open up a coffee place instead of being a miner. She was a single mom. She wanted to get out of mining. She didn't like mining. She didn't know anything else, but this gave her that opportunity. Today, she's actually going back to school and becoming a lawyer so she could work with the ASM in this particular community. It's an important piece of making sure the whole community is taken care of, make sure that the miners are engaged in the process of taking ownership of the plant, but we also have the community taken care of that will support all of the things that happen at the plant. Will the miners continue through? They have the community support. When other miners come from other areas because they see this as a better situation, it's the community that's dealing with being the police of the community. So this is a small story that comes out of this. The next slide, please. So how do you step for financing projects? The first thing is that we have to develop a community relationship. If the community doesn't want it, if the ASM doesn't want it, it's not going to work. They have to be engaged and have the community at whole. It's got to be inclusive. The miners buy-in. The miners has got to say, yeah, this makes sense to me. I want to be part of this processing plant. I wanted this cleaner technology. I want to be able to profit share in this project. I want to make sure that we take care of the community. Number 3, the Clean Gold owns the plant, and the miners are identified on what ore is coming into the plant, because we need to know, of course, that we have the ore. It's got to be able to process it. It's got to be a certain grade in order to get that return on investment. So number 4, Clean Gold is one that goes out and gets the arrangement for financing from the investor for the processing plant. And number 5, the processing plant pays the miners. Clean Gold's community solution pays the investors. So we make sure that everybody gets taken care of. Next slide, please. This is the processing plant with the processing workers. And interesting enough, some of them were the miners because they didn't want to mine. They actually loved the idea of being part of the processing plant. So that's what this slide is all about. Next slide. So what we've done is we've gotten the proof of concept, where ability, we have a competitive edge because we have the social license to operate within the community. The governments like us because we're now formalizing miners without having to force them to formalize. We have better supply chains. We've been able to get this an inclusive project. It's peaceful. We have in our model, we have an economic, it's a value proposition for investors. Obviously, it takes care of all shareholders, so everybody's happy. We have a path to profitability, the way that we've set up our financing mechanism. We can look at a return with that bonus balloon payment, 18 to 36 months, and an ongoing 15% profit participation with the investors ongoing of the project. And next slide. Thank you very much for listening to me, and I'm happy to take any questions that you might have. Thanks for the opportunity. Over to you.
Wow. Thank you, Firas, Manuel, Dewey, and Suzette. That was a really outstanding a group of presentations. You know, I was sitting here listening. I've put together sort of key words and ideas that came to mind, the common themes that have been touched on by all of you. Respect, community, the need for communication, transparency, always an ongoing dialogue to understand what the miners need, what the investors are looking for. How do you bridge that gap? What kind of synergies you can find through all those discussions? Education, training. What does that look like? Technology and innovation. You know, Firas spoke about, you know, mercury free. How do we layer in new ideas and innovation, and how do we communicate that? What I really liked through all these discussions, and I think this is a good segue into the fireside chat, is creativity. Like how do we take these traditional financing models and mechanisms. I mean, Suzette, you talked about royalties. That's a standard, standard banking structure for mining companies. For us that knows about it, we've all seen it, and to layer that into a really creative solution, it was amazing to hear. And ultimately, the value proposition that we're all talking about. How do we engage with the right value proposition so we create sustainable long-term businesses? That was outstanding. Thank you, all of you, for sharing your experience, your insight, your knowledge. And now we're going to translate those themes, I think, into this fireside chat discussion. We have a pretty phenomenal group of people here with us today. I'm just going to take a couple of minutes to introduce our panel. We have some questions that we worked on to start to get the dialogue going, but let's start. We have Daniela Guerrero from the Central Bank of Ecuador. She's the deputy manager. She has 9 years of professional experience in finance in the public and private sectors. Welcome, Daniela. Ron Thomas from Mars Consulting. He founded Mars in late 2016 as a boutique investment banking consultancy specializing in the precious metals sector, looking at the actual physical metal value chains. Jamie Webb from Ceerdy, welcome. Jamie, sorry, I'm just trying to find my note here. Jamie is the COO and Director of International Programs for Ceerdy. Prior to joining Ceerdy, she worked as a Regional Director for Asia Pacific at the UN Climate Convention's Technology Center. And lastly, Matthew Chambers from the Chambers Federation. He's the chair of this group. Matthew is an impact investor, a social entrepreneur, and chair of the Chambers Foundation. He has managed his family business for more than 20 years, expanding operations into the Philippines, Kenya, and the DRC. Welcome, everybody. We have a list of questions that we're going to get into, but maybe Ron, I think we have a sense of what Daniela is doing, what Jamie does, and Matthew. Can you just give us a little bit of a sound bite on your experience, and then we'll get into some of these really good questions.
Yep, sure. Thank you, Miranda. Good day, everyone, and thank you to all the organizers for giving the platform. My background is Bullion banking. I was with Bullion Bank before I started Mars in 2016. So I work with the formal segment of the precious metals value chain, from the commercial mines to refiners, to traders, to jewelry manufacturers, wholesale jewelers, and retail jewelers. So that's my background, wherein I work very closely with them for financing the sector from a private financing angle, because banks have their challenges of late with the regulatory changes that have happened. So I focus more on the private financing for the sector.
Thank you, Ron. And that's interesting. Certainly, as we're looking at, the mine to market, all the pieces of the chain, any mining venture needs capital. So that end piece is really crucial, and especially from our family office perspective, we're traders, so we're really trying to understand how we can actually get access to the commodity and what that looks like. So actually, to your point about banks, this is a good sort of shift. Daniela, good morning. Nice to have you here today. Thank you. I have a question for you here. The Central Bank of Ecuador is working with the National Development Bank, Miners, and Planet Gold. Planet Gold Ecuador, to develop a mechanism to help miners get loans, which will be paid back in part through physical metal. Can you explain to us, you know, how this mechanism works and how the central bank decided to get involved in this sector?
Muchas gracias por la invitación y realmente por incentivar estos espacios. Para el Banco Central del Ecuador es un orgullo ser catalogado como una entidad estatal del Ecuador referente en la región en el proceso de comercialización de oro para pequeños mineros y mineros artesanales. Estamos siempre enfocados en buscar el desarrollo del sector, en la formalización de los ingresos que se generan de estas actividades, así como realizar y participar activamente en la generación de fuentes de empleo. En cuanto a la pregunta generada, quiero comentarles un poquito el recuento de por qué el Banco Central está participando en esta iniciativa. El Banco Central, desde la implementación de la gestión de comercialización de oro no monetario que viene desde el año 2016, se ha acercado cada vez más a las zonas de producción del mineral. Con esto hemos buscado disminuir el costo de traslado y de seguridad y realizar adquisición de barras doré a pequeños mineros y mineros artesanales. Hay que tomar en cuenta que la gestión que tiene el Banco Central del Ecuador está enfocada en formalizar e impulsar el desarrollo del sector minero, generando mayores fuentes de empleo, objetivo que está de la mano con el incremento de las reservas de oro que tiene el país. A la presente fecha, el Banco Central ha adquirido un total de 253 millones de dólares a pequeños mineros y mineros artesanales y cuenta con un total de 347 actores mineros calificados. Es decir, estos actores han pasado o han cumplido todos los procesos de debida diligencia que se requiere para realizar operaciones con el Banco Central. El 80% del total de nuestras compras corresponden a producción generada por pequeños mineros y el 20% restante a los mineros artesanales y comerciantes, que tienen una función importante dentro del país porque son los intermediarios entre los agentes económicos y el Banco Central del Ecuador. Tomando en consideración estas cifras, el Banco Central ha venido implementando un mecanismo enfocado en compras de oro no monetario que esté también acorde con un enfoque medioambiental, enfocado en la formalidad y en buscar siempre el crecimiento de este sector. Con lo cual hemos determinado la necesidad de participar de manera activa en el desarrollo de una línea de crédito específica para el sector minero, en el que se contemplen las condiciones, características, plazos y requerimientos propios del sector y de las actividades que se generan. Con lo cual hemos impulsado una línea de crédito que contemple todas las especificidades del sector. Los beneficios son claros. Buscamos formalizar en primer lugar la actividad y a todos los partícipes, a toda la cadena que está atada a esta actividad, transformar los mecanismos de procesamiento de minerales y enfocar procesos en nuevas tecnologías que estén siempre de la mano con mejores prácticas con el medio ambiente, así como incrementar la capacidad de producción. Los beneficios de la implementación de este producto son que los agentes mineros con los que trabaja el Banco Central del Ecuador puedan verse beneficiados de una línea específica para ellos. Como plan piloto, vamos a trabajar con el Banco de Desarrollo del Ecuador, que es un banco público. Su nombre comercial es Ban Ecuador. Este va a otorgar líneas a los agentes que se encuentran habilitados para comercializar oro con el Banco Central. Este va a ser el plan piloto. Vamos a iniciar únicamente vamos a generar créditos o la otorgación de líneas a los agentes específicos que trabajen con el Banco Central, lo cual va a disminuir los riesgos porque el banco ya cuenta con una validación previa de la producción y de los agentes que hayan pasado todos los procesos de debida diligencia, que estén con su parte tributaria al día, que cuenten con todos los permisos de producción y con esto se da formalidad a la actividad. Entonces, para Ban Ecuador, para el Banco del Estado que va a generar esta línea, va a ser mucho más fácil establecer las condiciones del crédito a ser otorgado. En este sentido, hemos venido trabajando de manera activa estos últimos meses para poder definir y ya tener la línea de crédito. Lo que buscamos como Banco Central y trasladar o transmitir a través del otorgamiento de estos créditos es el ser una entidad que otorgue precios justos. Nosotros manejamos una metodología de cálculo de descuentos para las adquisiciones de oro que aproximadamente en promedio es del 2.5 del descuento del precio del oro. Lo que buscamos es formalizar al sector y bancarizar al sector. Nosotros todas las adquisiciones que realizamos las pagamos o generamos el pago a los agentes a través de cuentas bancarias. Es decir, obligamos a los agentes mineros que tengan una cuenta y que estén bancarizados, con lo cual también el otorgamiento de créditos va a ser mucho más fácil ya que tenemos información transparente. Queremos incentivar lo que es las relaciones comerciales a largo plazo entre los agentes económicos, el Banco del Estado y el Banco Central del Ecuador. Generar pagos, y este es nuestro objetivo principal, generar pagos en el menor tiempo posible con la finalidad de que se transparente estas actividades. Y esto va de la mano con el objetivo que les comentaba que tiene el Banco Central del Ecuador, que es el incremento de las reservas de oro para el país. Eso les podría comentar en cuanto al por qué el Banco Central está incentivando y es un pilar fundamental dentro de su gestión, el realizar este tipo de acercamientos y el facilitar estas líneas de crédito.
Thank you, Daniela. That's quite amazing to see, you know, a central bank being so proactive and being creative in trying to get involved fairly and responsibly in supporting the artisanal scale mining initiatives and trying to be proactive in working with these groups. And that actually is a good lead in. Ron, one of the questions here we have for you is, what are some ways that you have seen or thought that credit risk can be mitigated for artisanal scale mining? I mean, Daniela spoke a little bit as to what the Central Bank of Ecuador is doing and the relationship with a public bank, but what are your thoughts on this?
See, from a private financier's perspective, Miranda, the artisanal sector does not fit most of the criteria for a creditworthy borrower. So to extend the finance to that sector, we need to be creative. And one of the solutions that can be looked at is to do fixed asset leasing to the sector, which is we just saw in one of the previous presentations by Suzette. So fixed asset, when you do fixed asset leasing, it gives a lot of comfort for the private financier in terms of security of his capital. At the same time, the miner is also happy that his cash flows are not that extensive, and then he gets to use the fixed assets. And at the same time, the private financier gets the return on the capital that is deployed. One aspect that has to be kept in mind over here is that since the ASM sector, the geological studies in most of the cases are not extensive, the private financier has to be made comfortable that the fixed assets that is deploying. When I say fixed assets, it can be, the complexity can vary. Say let's look at the processing plant. So if I'm deploying a processing plant at the mining site, he has to make sure that processing plant is optimally utilized. So the feedstock has to be consistent. At the same time, returns have to be generated as well. So one aspect, one solution that can be looked at is that I can probably look at figuring out a simultaneous non-artisanal project in the same region as where the artisanal project is also running, and then allow the artisanal entity It can be the local government, it can be through Planet Gold, or it can be any of the cooperative societies, access the processing plant along with the non-artisanal project which is running over there, so that the plant is fully utilized and the private financer gets the return on the plant.
Sure. Thank you. No, and that's a very interesting way to look at it. I mean, as you know, I represent private money. As how do you step into these opportunities? And this was alluded to in many of the presentations this morning. Is, you know, in the absence of formalized geological studies, in the absence of the standard, you know, due diligence package that investors look for or are familiar with. And I know for us, we've been working on that. Planet Gold is working. How do you put structures around this? And Matthew, maybe that's a good way for you to step in here. You know, you represent you know, your own your private investment group and family group. What prompted you, given, you know, all these risks, what prompted you to get involved in investing in the sector?
Right. Well, it was definitely not by design. This was an accident. And boy, if we knew then what we knew now, kidding. Right. So we've always invested into communities, into people. We don't invest into sector specific. And it was just by chance. This was 12, 13 years ago. I was in Western Kenya, and we were working with youth groups that were farming, and at the same time, the price of gold had dramatically increased. So all of a sudden, you see this guy farming one day, and he's digging for gold the next. And so it was purely by chance that we came across this sector, and but we don't regret it. It's been quite an interesting journey. We are investing, for the most part, our own money, and we enjoy a more hands-on approach. So I'm calling in today from Goma and Eastern Democratic Republic of the Congo. I go out to these sites myself. We complete our own due diligence, and we like to see the people that we're working with. And but the sector definitely has a unique higher risk profile. We wouldn't recommend it for everyone, but I think it's you know, everyone that most professional investors, they're going to have a diverse portfolio, and I think there's a reasonable argument that that investors can set aside that higher risk that they're willing to take, and they can allocate it towards the sector. If there's over 40 million people in the sector, why not? If we can invest into agriculture, why not also be willing to invest into communities that are often not just mining gold, but perhaps in our context, also producing coffee and cocoa.
Yeah, thank you. No, and that's interesting. When I have participated in events at the World Bank and at the IFC, it's not just, you know, funding into the extractives industry. The creativity, the models can be applied across other sectors, because as everybody pointed out, it's about community, and it's about how you work with communities and how you get the communities involved, because this is their livelihood. This is what they are relying on, and how can we sort of the broader, bigger, you know, investing entity support that and get involved in that, and look at synergies and how we can evolve our thinking and support these operations. You know, and Jamie, that's probably a good segue for you in Vancouver. Are you in Vancouver? At CIRDI. You know, you have spoke a little bit when we connected earlier about your work in Guyana and what kind of financing mechanisms, you know, we've seen, Colombia, Indonesia, Ecuador, Matthew's, his work in Africa, Ron's expertise. Can you talk a little bit about what you've been doing in Guyana and what kind of mechanisms and conversations you've been having with the financing entities in Guyana?
Yeah. Well, thanks, Miranda. Our work in Guyana is really just getting started now. We're starting to engage with the stakeholders and look at some of the different options that are available for impact investing. And one of the things that we're very lucky to have in Guyana in terms of an enabling environment is a well-functioning Women Gold Miners Association. And for us, this is really important. I actually come from a background in climate finance. And one of the very early projects I worked on in climate finance was almost 20 years ago with the World Bank, where we set up a payment for carbon, basically. And we had one regular mechanism, which just, you sequester carbon, you got paid. And then we had the biocarbon fund. And the great thing about the biocarbon fund was that it also offered opportunities for biodiversity conservation, for restoration. And the expectation was that even though this was higher risk, required more capacity building, and required more due diligence, that people were still going, so as a result, it was more expensive, that people were still going to be attracted because it did good. It didn't. We basically had one bilateral donor that was interested, but we attracted no private investment money. And when I look at what we're engaging in Guyana with the Women Gold Miners Association, it's important for us to have that enabling environment there, because I'm very, very concerned when we look at the ASGM finance space that women are going to drop out of the equation. There are a number of additional barriers to investing in women-run mines in many countries. The lack of assets, the lack of access to collateral, and the lack of employment of women in the sector. And that's fairly standard. If you're an impact investor, are you going to invest in somebody who likes the idea of mining but never has been employed, or somebody who's been employed in mining for 20 years and now want to spin off on their own? So if you don't have that pool of qualified women miners, how are you going to invest? So, having that enabling environment in place in Guyana of the Women Gold Miners Association is something that I really would like to highlight here as an important precondition. When we talk about that enabling environment in the early slides, having that formalized engagements line, having a pool of well-qualified, vetted, investable women miners is going to be something that changes the approach in Guyana compared to the approach that we've seen in, for example, we're just about to produce a report on our work in Rwanda. So it's a very, very different setting. And that's what makes Guyana so exciting and so interesting to watch as we develop that financial mechanism in partnership with Conservation International and Planet Gold, and in very, very close consultation with the Women's Gold Miners Association.
Thanks, Jamie. I think it really highlights that we can have solutions. We can come up with sort of a broad-based solutions, but we really have to look at each jurisdiction. Diversity, culture, belief systems. How do we integrate the financing models that we're all looking at and understand and layer them into specific situations to actually make them work? And Matthew spoke about this, and Daniela and Ron and all the presenters. How do you work within the cultural structure of those jurisdictions, and to find those best fit solutions that are sustainable, that allow opportunities to grow, and allow investors to have full understanding and transparency as to these operations. I mean, we've talked about vetting, the right operations for us to get involved in. How do we as investors standing back get comfort in that? I've got a couple of questions here that are sort of broader for all the panelists. And maybe we'll start with Ron. what do you think, based on your experience, the most critical barriers to entry for financing ASGM, Ron? Like, what do you use today based on your, background and your specific experience?
My background is bullion banking, Miranda. And as far as I can see, there are two critical aspects for ASGM for accessing the finance. One is the legal and compliance, and two is the credit risk. The legal and compliance is a very critical aspect, which I work with the formal sector of the precious metals vertical, and they all have to follow OECD supply chain guidelines. They get audited on a annual basis on a supply chain, so they have to follow these guidelines. And the ASGM sector, since by virtue of its very nature, it's an aggregator model, establishing chain of custody becomes a little difficult in few of the cases. Matthew, I know that you have successfully done it in few of the countries, but in many instances, it becomes a little tricky, a little difficult for the physical consumer to actually get comfortable with that model. So with the help of Planet Gold and local the governments and innovative auditing solutions, we could mitigate those risks, but that's one of the critical aspects. The second aspect is the credit risk aspect of that business. As I mentioned, they don't fit into the normal credit risk profile of a formal industry borrower. So we need to figure out innovative solutions for mitigating that credit risk, which gives comfort to private financiers. Commercial banks have got their own challenges on a regulatory perspective. So that is the reason why I work more with private financiers than with commercial banks. So private financiers, obviously they are worried about their capital. So they need to be made comfortable. And then the only way, as far as I can see, to make them comfortable is by having fixed assets at the site and having the title with the private financier. And that asset should be redeployable. It should be, a particular ASGM mining site will have life for a very limited number of years. And after that, it has to be redeployed. And the machinery over there has to be taken care of, it has to be maintained. So people have to be there to manage the assets. So these are some of the challenges that the ASGM would face.
Thank you. And Daniela, same question for you. What coming from the central bank perspective, what barriers do you see as the greatest, the greatest stumbling block for getting into investing in the ASGM sector?
Muchas gracias, Miranda. Creo que la principal barrera aquí es la informalidad, como mencionábamos, del sector. La falta de formalidad en las operaciones, no existe una información que ayude a transparentar los ingresos que se generan a través de estas actividades. Muchas veces las operaciones manejan altas sumas de dinero, pero son en efectivo, no pasan por las cuentas bancarias, con lo cual es difícil poder tener una información veraz al momento de ver las condiciones del crédito. Esto va a generar desconfianza en el sistema financiero, porque al no ver plasmados los ingresos en sus cuentas o a través de temas tributarios, se puede desencadenar un riesgo de crédito, como bien mencionaba Ron, y el análisis que se tiene que hacer por parte de las entidades es mucho más complejo, lo cual le resta tal vez interés por parte de las entidades financieras, ya que conlleva un mayor uso de recursos humanos para enfocarse específicamente en el otorgamiento de este producto. Entonces creo que es importante, aquí el tema y la barrera más importante es el tema de la ilegalidad. Las personas que están dedicadas a la minería sin un permiso, sin tener la aprobación del Ministerio Rector de esta actividad, puede desencadenar en lo que está pasando, que no hay fuentes de ingresos para este tipo de actividades. Entonces creo que debemos cambiar, como bien decía Miranda, el tema de la cultura de nuestro país, enfocándonos, por ejemplo, en el Ecuador. No debería ser una obligación el generar tributos por estas actividades o el pasar a través del sistema financiero, sino más bien debería ser un compromiso del sector con la finalidad de mejorar el tema de poder acceder a líneas de crédito.
Thank you, Thank you, Danielle. That's excellent. And now you, Ron, have spoken about, I've asked you about the barriers. Now we're going to sort of take it on the other side. Jamie, what do you think minors need to do in order to increase their access to finance? We've talked about the risk and the barriers. How can minors, artisanal scale minors, try to work? And it probably ties in very well into what Ron and Danielle said about legality and formalizing in some capacity. What are your thoughts?
Yeah, I suppose my first thought is just about being patient. A lot of the times when we start to engage with ASM communities, so many of the minors have already entered into loan agreements that block any other further finance, whether it's a loan agreement that has an offtake or it's royalty based. And very few investors are going to come in when there's a non-formal loan already in place that has first claim over the assets and say, okay, now we'll give you additional funding to go from the exploration side to the production side and the sales side of it. So it's very difficult to say when somebody's looking to build their livelihoods to say, Planet Gold is coming, please just be patient, wait a little bit, make sure that you're making the smart decisions now to be able to access these financial mechanisms. It's very difficult to pass that message on to communities that are just trying to put food on the table, trying to pay their children's school fees. But that is unfortunately the reality of the situation. The Planet Gold project is going to achieve amazing things, but it needs time for these financing mechanisms to go from the pilot stage through to the full rollout stage. It needs almost a blank slate on both sides, on the finance side, but also on the side of the minors in who we're investing. So, I don't really know how we fill that gap, whether, especially during COVID, when we're really just piling on and saying, okay, now you're losing other sources of livelihood, but still, please wait, don't end into sketchy loan agreements, don't give up too much of your rights. But we have to find a mechanism to do that. And that may be a role that some of the impact investors can come and step in. They can look at places where Planet Gold is going to come up with broader financing mechanisms, and they can start to provide that kind of intermediate seed funding on terms that any national financing mechanism or any formal financing mechanism will accept as being understandable and absorbable within the risk profile. As Ron mentioned, this is a different sector. When you add in the non-traditional loans to all of the other things that make this sector unique, it pushes it just a bit too far in most areas and for most lenders. So.
Yeah, thanks, Jamie. And that's good. I'm going to go to Matthew with this too, the same question, but it really does speak to bridging that gap. When you talk about people and communities, people trying to support their families, and how do we communicate, what we're trying to do, that and Suzette spoke to this, that partnership, ownership, building a relationship, so the entities understand what we're trying to do, but to your point about patience, if somebody's coming along with the opportunity to say, here, we've got cash to pay for your material, for your ore, of course, because other mechanisms could take longer and there's more structure to them. How do we find that balance? Like, how do we find that middle ground? Matthew, what are your thoughts on this? Having, as an impact investor, on the ground, speaking to communities, what are your thoughts?
Right. I just add a little bit more here to the pre-existing points that miners should pay greater attention to who they're selling to and what impact that might have for them and their community, their home, in the long run. And while it's important for miners to formalize and adopt systems, if you don't mind me plugging the craft code, the rest of really what needs to be done is on the development side. This is on the market side as well. And so I don't think the burden is really on the miner, but rather us to work with stronger, more organic approaches, not the top-down approaches, greater market-based approaches, engage the private sector, engage the supply chain. Now, when you start your project, don't wait a year, 2 years and say, oh, now we need to bring this to market. It's a progressive approach. You need to start to integrate and work with that supply chain from the very beginning.
Great, thank you. Susan.
Yes, Miranda, I was just.
We have a lot of questions popping up.
We do. So yeah, I was just going to pop in here. And first of all, thanks to everyone for a really fascinating discussion. And Miranda, thanks for your great facilitation. What I will do is I'm just going to go through the questions. I'll try to collapse where people are asking similar questions. But there's a lot to get through and we may not have time for them all. But I do want to tell participants that we can archive these questions, and the Plantical team and panelists and others participating can try to answer the questions after the webinar. There will be a page for this event on planetgold.org after the event. So don't worry if your question didn't get answered during the live event. But let's start. We had similar questions actually from David Finley, Yves Bertrand, and also from John Tixon, all really talking about the role of prospecting and how important it is to really for finance to enter the picture. There really needs to be an understanding of what the resource is, and prospecting can help provide that information. So maybe Firas could take this, or really anyone else, but maybe it's directed at Firas. What is really the role for financing for that end of things, not just for the equipment, but as you mentioned, there's a lot more that needs financing than just equipment.
Absolutely. Thank you, Susan. And I know Dave, and you mentioned a couple of points there. I just want to highlight, it goes back to looking at the industry and not just paint it with one brush. Yes, there are deposits that are low grade that will not work with the upgraded processing facilities. But I have seen personally data on many other projects in different parts of the world, in Mongolia, in Colombia, in Burkina Faso, where the grades are actually pretty high. And that's like going back to Suzette's presentation, where you can afford to get 40% of the gold and still make it economic as an artisanal miner. The gold is there. And unfortunately, a lot of that, the 60%, gets put into tailings that's contaminated if you're using mercury. So the grade is there. You can see 12 grams a ton. And Manuel can correct me if I'm wrong, but I believe that low teens, 10 to 12 grams a ton, you can find that in Colombia. And that's a grade that large scale miners would die for. It's just the area, the location, and it's just not explored by large scale miners. And there's that showing of that grade where additional exploration might actually prove that there could be a larger deposit there, and it could work with the miners to grow that operation. You could probably start as artisanal or really small scale and go to a medium scale as you understand what you have. And that's really the critical part. And it's to understand that it exists and it will. The economics, of course, have to be defined and really understood well. But from a high level perspective, if you're having a 12 gram or 15 grams a ton, even if you were down to like 9 or 8, you could still find a way to process it. The other thing is that how do miners do it right now? Well, they don't, and that's part of the issue, is that there's not a lot of miners that actually know what they have. It's just they have been mining for a long time, and just like Seth said, they go and find the ore. It exists, and it's been going on for a long time. But if you tell a financier that, well, this is what's been happening in the past, so it might go on to the future, some investors might not be comfortable with that. They want to know it. And an area that I would like to explore more, we kind of started talking about it internally at the Artisanal Gold Council, is what cheap or inexpensive, I should say, ways of exploration we can apply to learn as much as possible and find that, using the term that Miranda just used, the middle ground, or how much can we spend and not too much, but find enough that we can have some comfort and certainty around the production that's coming out and the length of the operation. I hope that answers part of the question.
Great. Thanks, Ross. Does anyone else want to weigh in on that or have any other comments before we move on to the next question? Okay, great, thanks. So the next question from Pablo Rodriguez, I think really could be for Dewi or Manuel. The real question is how can you break the barrier that the financial institutions have this, bad impression, negative impression of small scale mining, so or don't understand it well. So how do you break through that lack of understanding in order to convince them to participate in these finance mechanisms? So either Manuel or Dewi, I know you've been talking to financial entities.
Yeah.
So maybe Manuel first and then Dewi.
Okay, thank you. First of all, we have started an entire process with the ministry to generate confidence to the financial system. And I want to emphasize that in any strategy we implement, we want to link the authority into the solution. So first of all, we think we have to guarantee that the authority have the capacity of providing reliable info of each miner to financial institutions. Second of all, we have created a strategy of education and training in 2 ways. We mean to find allies in territory who are interested in providing financial solutions and to help them to acquire the knowledge of how is the best way to analyze this segment of the economy. Also, we are planning to train the communities in how to access to these products. So I think it's a work that we have to do in 2 ways and include the authority in order to break this barrier. It's what I think.
Okay. For our project itself, Susan, what we're doing is first we're talking with the local bank, with the local branch. So the local branch is not sure what they can do, how they support, are they allowed or not to support this sector. Then they should just have to talk to the main branch. So again, we approach the main branch for all the state bank. Again, they're not clear about all this sector. So we develop the guidance. This guidance is provide for the Financial Service Authority in Indonesia. This Financial Service Authority is the main authority that can give the instruction or assist or lead all the banks in Indonesia to control the bank in Indonesia that this is you can do. So we provide all the document for this. At the moment, we already submit the document to the Financial Service Authority in Indonesia to get approval. So we are expecting that from the approval, all the state bank Indonesia, start from the main branches to the local branches, can understand and accept all this sector. So maybe in the end they can support all this sector. There is also the regulation in the some of state bank that they're not allowed to support the mining sector, and they are sending the letter to the Ministry of Economic for asking about this. is that the financial scheme from the local branches allow or not to support this. This is the process we're doing it, Susan. It's still a long way to go, but we already doing step by step, approaching and persuaded all the state bank and until the higher level of financial service authority in Indonesia.
Mm-hmm. Yeah, great. So it's an iterative process. Who wants to jump in? Go ahead.
I would like to jump in. I think risk
Go ahead,
mitigation.
Suzette.
Thank you. I think risk mitigation for investment is always there. I think what we need to do is look at all of the risk factors and how do we address them. They're actually individually. I think one of the things that just because it's a new investment vehicle, that we have to look at what the historic outlook has been for small investment. We don't have a lot, but the biggest thing that I think that we need to bring to the table is business expertise. So that, you know, how to get to market, how to financial control. That was when in our model, we brought in that third party that was able to secure the investment. I mean, we've already proven to our individual investors that we were able to do this. That was number one. And it was because we brought in that business expertise, they able to market and be that mediator partner with the ASM.
Mm-hmm. Yeah, thanks, Suzette. That actually links to another question later from Rodrigo, who mentions about, he made a comment on Manuel's slide where he saw the dotted line indicating technical assistance. Dewi also mentioned helping miners to develop these business skills. You've mentioned working with your miners to help with the business skills. Can anyone, maybe Manuel, Dewi, Suzette, comment on the kind of technical assistance that you, Suzette, you just said so, the kind of technical assistance you provided with the mining community. Maybe Manuel or Dewi, you can talk further about the kind of technical assistance you're providing to miners as part of helping them gain access to finance?
Okay, for what we're doing in the projects there, because you can see all over the world when you're talking about the cyanidation process with all the big tanks, and not all miners have the capital for providing such a big processing plant with need a lot of capital. So what the project doing is at the moment of providing with the small prototype design, downscale from all the big scale from the cyanidation system. So with this prototype, we're not gonna using all the fancy or the need a lot of capital for this. So we have make a setup the technical the processing plant that can be afforded by the miners, and also can be later and can be provided or supported by the bank when they do the loan for the loan proposal.
Great. And Manuel, do you want to speak on that?
Yeah, I think that it's very important what Rodrigo mentioned in his question, because technical assistance is mandatory in these kind of processes. In the project, we are working with a government entity specialized in providing technical education to different communities and sectors of the economy. We are working with them in order to create contents and technical training programs to miner communities to give this assistance. And we need to link these contents and this training with this strategy that I was presenting on my slide. Also, with the ministry, we are creating processes to accompany the miner when he's trying to access to finance system, and we think that it's important to work with the authority also in this sense.
Suzanne, can I just jump in here very quickly?
Of course, go right ahead.
Yes, based on what Dewi said, CERDI is also carrying out quite a bit of work with mining shared values on local procurement. And the focus on local procurement is really building the technical capacity to be a supplier to the industry as well. So it's not just about those that are taking the minerals out of the ground, but those that are downscaling the technologies, adapting them for local use. So that what that actually ends up doing is driving down the cost of operations for the miners because they're procuring locally, while building a supportive economy around mining beyond the extraction itself. And that, to me, is a very, very important piece in the investment landscape. It's not just about investing in the extraction, it's about investing in all of the industries that support that extraction and that allow the miners to operate in a lower cost but higher efficiency environment.
Thank you. Any other comments on that before we move to the next question? Okay, again, we don't have time to answer all the questions, so I'm sort of skipping through to try to pick off ones that I think are representing questions that are emerging from a number of different commenters. One is questions from Ingrid, and it really relates to choosing how you decide which mining entities and operations you're going to work with. So I think this question was really directed at Suzette, but I believe it applies to others who are working with ASM operations in the field. How do you gather all the information required to determine the suitability of a particular operation or community that you want to work with in the first place? And how long does it take to make that final determination and choice? And maybe Suzette can field that, and then maybe also Matthew might want to take a stab at that, because I know you've been working with a lot of communities. So maybe Suzette first.
Yeah, I think interesting enough, it's believe it or not, communities find us. So they've heard about us and what we've done for somebody else, so they reach out to us. So the next step with that is, if we don't get community buy-in, and we've never not had community buy-in, first is making sure that the community's behind the project. The second is the miners, and then we look at the grade of gold, and we test the passion of them moving forward. Nothing is easy in life, and unless they're willing to accept the challenges, we can't work with them. We have to make sure the investors are getting their monies back.
Okay. Matthew, do you have any comments on how you choose communities to work with?
Right. So most of the mining communities that we work with have been part of a donor-funded project, and so that's generally how the initial introduction is made. But part of our evaluation is to look at how we're going to get the gold from their mine sites into our facilities. So logistics can be very, very important. But what else does that community produce? Where we are sourcing gold from, we're also sourcing cocoa and coffee. And again, it's about taking a more holistic approach. We don't want to just invest into a mining cooperative to potentially exacerbate their dependency on mining, right? We need to look after their long-term interests, work with them on their long-term interests, and create livelihoods that are not just about mining. Yeah.
Great, thanks. I'm skipping down now to a question from Gavin Hilson about really the scalability of the solutions that we've heard about on the talks today. We've heard about a wide range, but a lot of them are centered on developing capacity for centralized cyanide processing and having miners work with that processing capacity. But in some settings, that isn't an appropriate solution. Either the government doesn't permit it, or there's big barriers to transitioning. And in those settings, what are maybe the more appropriate financial models? So maybe I'll actually turn back to Firas to address this in a holistic way, and then if others want to jump in their, with their particular examples of working with other kinds of solutions. So Firas, do you want to tackle that one?
Yeah, thanks, Susan. It is a tough question because yes, when certain parts of the world where cyanide, like Mongolia as an example, where cyanide is not a possibility, or the government is not open to using it. There's two things that happen. This is a technical issue. So we want to know, okay, what is the recovery? If we don't have cyanide, what are the other recovery options? So the technicality of what do you replace that with? And there are some other ways of recovering the gold, gravity circuit, or some other leachants that could be used. AGC is working on one, for example, but these are being tested, and that's kind of the alternative. Now, the financial model to use is going to rely on the technicality of the production. So what kind of recovery are we using? Are we getting, if you're not using cyanide that would give you the 95% recovery, are the other methods that you're working with can give you 80 or 85? And how does that translate into finances at the end of the day? So it's going to translate to cash flows eventually, and that's what you're going to be work with. Maybe you're going to be focusing on higher grade. It is unfortunate that you might lose quite a bit, but overall, from a production perspective, that would be higher, that would support more cash flows. I think that's kind of like where I can answer this, but maybe someone else can add to it.
Just to add to Firas, in my opinion, there is no one single solution, one single financier who can address all the issues in a particular country. Probably there is a role for an impact investor, there's a role for a developmental financial institution, there is a role for a private financier, and all these three parties have to come together onto a single platform, which might be provided by Planet Gold, and then have to work as a team and then provide a solution for financing a particular project in a country.
Great. So we only have 5 minutes left in the event. I do think there's one last topic that has been raised by a lot of people in the question and answer box about how do you make sure that this production is responsible, sort of all along the supply chain? So we had questions about, first of all, what does it mean to be responsible production? What are the criteria for that? Where Matthew's going to plug the craft code. That's okay, because that's very aligned with the Planet Gold code as well. And that also, what is the role of the, all the downstream actors in the supply chain? What, for example, Suzette, what kind of environmental and social safeguards did you use when promoting cyanide, this transition from mercury to cyanide? And also the downstream buyers, exporters, and buyers, all the way to the bullion market. Sort of what is the responsibility of everyone along that chain? So it's a big topic, but just in the last couple of minutes, if there are panelists or presenters who want to make any kind of comments about, the importance of that kind of traceability, verification, et cetera, system in de-risking finance for small scale mining. If anyone wants to comment. Actually, Ron, maybe you can, since you were the last speaker, as someone at the receiving end, what would give you comfort in terms of ensuring that gold is produced responsibly?
See, as I mentioned earlier, that's one of the most important concerns that the end user, end physical consumer has got, because all of them get audited on a regular basis. So unless and until they get that comfort that it is responsibly produced and the chain of custody is established, it becomes very difficult for them to buy it and then even finance it. So Planet Gold can play a very important role in that, along with innovative auditing solutions, on the ground auditing solutions that there are players who actually provide that. We need to deploy that, and then get chain of custody from the source to the end consumer, and that's the only way that can be done. Without which, it becomes difficult for any physical consumer to actually purchase metal from this channel. Any responsible physical consumer, I must say. So,
yeah.
I can answer. Yeah, sure. One of the things is, in order to get that that end check to that miner is that we have to follow certain rules and regulations to get there. And obviously that in order, the refinery, said we need to make sure that, it was mined responsibly and their whole checklist. And I can go through it, and I don't want to spend all the time going through it. We all know there's a checklist in order to be responsible socially, environmentally, and so the miner had to buy into that check. We had to do that. We had to go to the mine site. We had to sign off on all of that supply chain in order to sell the gold to make that spot price at the end of the day. And the miner walked with us as a partner in making sure of that. On the cyanide level, we knew responsible cyanide. We hired the experts that could be responsible in the cyanide production. So we took care of that. So all the way through the whole chain, our partnership in this project made it happen so that we were responsible.
Great, thanks.
I have
Suzette.
one point for this, Susan.
Yes, of course, Jamie, go ahead. You have the last word, Jamie, go ahead. And then Miranda.
I would just say on this point, I would encourage collaboration with the work that's going on climate smart mining, because they're facing the same challenge. How do you ensure responsibility across the supply chain while avoiding exclusion? And that's the important part, is you don't want to set in place policies and procedures that are so strict that you then restrict participation to those that have even higher capacity than you're trying to encourage. So I do think there's a space for a discussion between Planet Gold and the climate smart mining space to try to solve this problem together and creatively find a solution.
Thank you, Jamie. So I'll turn it back over to Miranda for closing comments.
Thank you, Susan. Thank you, everybody, the panelists today, the presenters. We've had an outstanding discussion, I think, on how we can look to creatively and sustainably and in the long term look to fund artisanal scale gold mining. There is excellent work being done on many initiatives globally, which we've seen today, which is fantastic. We've talked about creative solutions. We've talked about engaging the community. We've talked about building synergies. We've talked about transparency, supply chain, the broader focus, not just on mining and extraction, but the broader economic impact in other industries and other initiatives in and around the community. It really speaks to the diversity, the thought that is going into this, the experience, the insight. I mean, we've covered multiple different mechanisms, people from all walks of life, which I think is really representative of the broader mining industry as a whole. I think there is great work being done. There's clearly lots more to be done. Lots of, I'm sure, discussion and dialogue will evolve from this. So on behalf, I just want to say thank you, everybody, for allowing me the opportunity to participate. And it's been a privilege to meet you all today. Thank you for your insight, your work. I look forward to actually meeting people in person when we can travel again. We have been through an extraordinary time in our lives over the last year. And it is really a testament to the resilience and strength of everyone that are working to continue to drive this specific part of the industry forward. So thank you, everybody.
Thank you.
Thank you. Goodbye. Goodbye, everyone.
Thank you.
Thank you.
Thank you.
Stay safe. Stay well.
Bye.